Public offering market may have been down in the dumps for a while now, but laboratory chain Thyrocare has shown it has the cure to this malaise. The company has seen a stellar listing, with the stock jumping a whopping 49% minutes after the opening trades today. Here's a report on what's made Thyrocare such a darling of the bourses.
Congratulations.
That resounding gong marks the start of a historic day for diagnostic laboratory chain Thyrocare Technologies. The company's shares jumped nearly 49% from the issue price of 446 rupees per share moments after trading went live. It closed day one at 618 rupees per share, a 38% premium to its issue price. Analysts say this is not surprising. After all, the IPO was subscribed 75 times by the time it closed. That's the highest subscription for an IPO since 2007. In contrast, rival diagnostic laboratory chain Dr. Lal's, which listed less than a month ago, was subscribed just around 33 times. So what's made this stock so attractive? Margins. At 40%, this is the highest in the organized diagnostic market. The company says this is because it has a presence across over 2,000 cities in India and internationally. What's more, it plans to open another 25 labs across the country, but says that margins, which have been at these levels for 10 years now, will not falter.
I have sustained for the last 10 years. I have a comfort to manage it at least for another 5-10 years. Might be 2-3% less, but it certainly will be a good EBITDA, as good as what is today.
Strong margins aside, the company has also been posting a steady growth in both revenues and EBITDA. It says that on average, in the last 4 years, sales have jumped over 23%, EBITDA by nearly 20%, and net profits by over 18%. Velu Money is also banking on increasing his testing portfolio to ensure growth is not hobbled by growing competition. He says new labs and new tests will reduce his dependence on thyroid testing, which today accounts for a major 17% of revenues. This greater exposure to other diagnostic procedures will help tap into a segment that saw industry-wide volume growth hitting 376% in FY15.
There will be competition which will be trying to put the growth down, and there will be these multiple laboratories which will help me to add more to the growth. So I have a reason to believe somewhere between 25 and 35% is possible by the top 25 players in the industry, and I would be very happy if I am ahead in this 25.
Of course, the fact that Thyrocare went into the IPO with zero debt and cash reserves of 90 crore rupees has been a point in its favor. But the stunning performance on day one has raised some questions about the company's valuations. As things stand, the stock price reflects an EPS of 12 rupees for FY16 and 15 rupees for FY17, and is at a whopping 50 times the price-earnings ratio for FY16 and 40 times PE for 1 year forward. Bureau Report, CNBC TV 18.